So this will be to go over problems 3.4, 3.5, and 3.9, which were assigned for homework. This should be reviewed to most everybody, and if it is not, you need to let me know, because I can certainly do more videos or provide more information if you need, more review than I'm going over as we do the existing videos. So problem 3.4, fairly straightforward. You're given a trial balance. You're given all the information to make the adjusting entries. So you're given the adjustment data, no calculations involved. You just have to know that you've used up 4,000 of the supplies. You get the supplies expense, depreciation expense, and your accumulated depreciation, and your interest expense and payable. And as far as working with a worksheet, you know that you have to add the accounts that are not above down here, okay? So you end up with an adjusted trial balance, and if you want to, you can add the 4 more columns where you do the balance sheet information and the income statement and then the balance sheet. I just left it with the adjusted trial balance and went directly to the statements themselves. So they asked you for the adjusting entries, so those should be in good format at this point. And then when it comes to doing the income statement, they're asking for a multi-step income statement, retained earnings statement, and classified balance sheet. They give you the other data that salaries are 70% selling and 30% administrative, and they give information about the rent and all of these things that you need to do the statements. So when I am confronted with something like that, here's the, the total of all the various accounts. Here's the percentages that are selling, and you can set this up as this is 70%, and then this is whatever's left over. So you've got your selling and your administrative amounts for each of these. So then you can move on to, right, wherever I did these, over here, okay? So you can move on to your income statement. And at this point, you should be doing these in quite good format, so you know that you have your top section with your gross sales, less the sales returns, less any sales discounts if there were any, to net, cost of goods sold, and then gross profit. And then they're breaking it down into selling expenses, and so we figured out the amounts for those, and then our administrative expenses. We get a total, and then our income from operations is the gross profit, less all our operating expenses. Income from operations, we have to remember that interest is generally an other, as would gains and losses on sale of equipment, and we come down to a net loss of $5,600. Okay. Retained earnings statement, you have to remember to pick up the beginning. Here's your net loss, there were no dividends involved, ending. Okay. And then they want the balance sheet. I'll get this blown up so I can't see where I've done the balance sheet. Oh wait, here we go. Way down here. Okay, the balance sheet. You want to do the current assets, the property, plant, and equipment. And then here, they gave you the note payable. Part of it is current, part of it is long-term, so that has to be reflected. Okay. Closing entries, after you do the financial statements, you should be able to do these. There were no dividends, so you're just remembering to close them all. And then your post-closing trial balance. Okay, hopefully, if you do have questions or need more explanation on that, do let me know. Okay, the other one you had was problem 3.5. Let's take a quick look at 3.5. This was the Savard Theater, and these were where you had to really compute the adjusting entries. So, to get to the depreciation, you just have to go through the usual cost plus salvage, the base, and it's going to be 10.5 each year. The note payable, this one was a little bit tricky because the days in October would be 31 days in October minus the date of the note gives you 11 days in October. 30 in November, 31 in December, for a total days that you have to accrue the interest on of 72. And we use 72 360s. So that comes out to 1440 that you have to be doing your interest expense and interest payable. So the total interest on the note would be, 1,800 of that we're accruing the 72 360s. Okay. All right. For 3, they're asking 2,000 admission coupon books were sold at $30 each. So we've got 60,000 of admissions revenue that was reported but had not been earned yet. So that has to be removed from our admissions revenue and put into the unearned account. Advertising was paid in advance and was included in advertising expense. So here we have to say, okay, that was actually prepaid, not used up yet, and we reduce our advertising expense. Salary and wages payable, fairly straightforward. They want to know what amounts would be shown on the income statement for each amount. So for this, I start out with the beginning balances that were given. These are the various adjustments that were made, and then you can use the specific accounts that gives you the answers right there. Okay, so that was 5. We can look quickly at 9. 3-9. Okay, and it's a little bit bigger so you can see it better. This is the Crestwood Golf Club. Again, you're starting with an unadjusted trial balance, expected to make the adjusting entries and get to the adjusted trial balance. You got a bunch of items that end up down below here that have to be included. So to compute the depreciation expense, there's no salvage, 30 years, so the annual is $44,000. So you are having to make those computations. If there's any questions on any of these, I think most of them are fairly straightforward. And so you're also supposed to do the closing entries, and you'll notice you've got 3 different revenue accounts that all get close to the income summary in this one, and we don't have dividends in this problem. Okay, so you can use T accounts to post things if that's easier. You don't have to do out the accounts. I don't think this one asked for all of the statements, so I think that takes us through the homework.